Everyone, Extreme Crypto here. We just saw a massive dump in the crypto markets. What's causing it? What's happening? We'll look at the news, see is there any indication why it's dropping this much? Is there any reason? Or is it just another correction? Let's see. We'll find the latest news, find out what's happening, and we build from there. So we found a bit of news. Let's see, can this possibly be the reason? Bank of Russia wants a Bitcoin ban. Here's how that gone in other countries. Let's see. In brief, the Bank of Russia has proposed a full ban on cryptocurrencies. A handful of other countries have taken such a step. Dozen more have implicate bans in place. The Bank of Russia on Thursday issued a report calling for a total ban on cryptocurrencies. While Russia banned cryptocurrency payments in 2020 and the central bank last month flooded a ban on cryptocurrencies investments within the country, today's proposal would go further. Citing environmental concerns, it would immediately halt Bitcoin mining in the country, which provides over 10% of the computing power to the Bitcoin network. It would also prohibit financial institutions from handling any transfers on the digital assets. Not only would Russians not be able to buy goods and services in Bitcoin, they wouldn't be able to buy Bitcoin. It's hard to imagine a cryptocurrency ban being enacted without the support of President Putin, who has been in office for 18 of the last 22 years. He spent 4 years as Prime Minister due to term limits, which have since been amended, and who has vacillated on his stance toward crypto as he works out the geopolitical ramifications. Moreover, many crypto proponents see Bitcoin and decentralization network as almost immune to bans. It's difficult to police access and use of assets that are essentially open source computer programs. We've seen this multiple times, one ban after the next, and yet crypto is still coming around. But other countries have already banned cryptocurrency, either explicitly or implicitly. According to a November 21 Law Library of Congress report, 9 countries have explicitly banned cryptocurrency: Algeria, Bangladesh, Egypt, Iraq, Morocco, Nepal, Qatar, Tunisia, and of course, China. Wow, we've known that one since the beginning. China is against cryptocurrency, even though they hold one of the biggest wallets. Their government wallet is one of the biggest wallets, holding around about 195,000 Bitcoin. With the exception of China and Nepal, all of these countries have large Muslim majorities. There is an open debate whether Bitcoin is permitted under Islamic law, which forbids the charging of interest or other financial or deemed exploitative, while a number of prominent clerics have declared Bitcoin to be halal or acceptable. Others such as the Ulama Council in Indonesia have ruled it haram or forbidden because the cryptocurrency does not take physical form. But even with bans in place, not every country can completely enforce them. As of July 2021, according to the Cambridge Centre of Alternative Finance, the 9 countries above control 0.19% of the Bitcoin mining hash rate, meaning they contribute roughly 1/5 of a percentage of the network's total computing power. None of that, at least according to Cambridge stats, come from mainland China. China, the world's most populous country, has its own reasons for prohibiting cryptocurrencies. In critics' eyes, the regime prioritizes financial surveillance as a means of maintaining control over its citizens, whereas decentralized technology skews toward privacy and financial freedom. China is currently piloting a central bank digital currency, a virtual version of its yuan. It's part to undercut ubiquitous financial service offered by private companies and group entities. Beyond these states, with explicit bans, an additional 42, among them Indonesia, have implicated banned cryptocurrencies per the Law Library of Congress. Although law and regulations related to the nascent technology are constantly shifting, this can mean that their governments do not allow financial institutions to take on cryptocurrencies or holders as clients, or that they even prohibited cryptocurrency exchanges from operating, among other restrictions. The list of countries includes Benin and Burkina Faso. Both fall under the Central Bank of West African States, which does not admit crypto within the economic zone. The same goes for Cameroon and Chad, which are members of the Economic and Monetary Community of Central Africa. CMAC says that because digital assets aren't regulated within, they are illegal. None of this stopped Chad and Burkina Faso from registering the 5th and 6th highest peer-to-peer trading volumes for Bitcoin in Africa as of September 2021. According to useful tabs, fruit, their numbers pale in comparison to daily volumes, says Binance. There are also pockets of resistance to crypto throughout South America, despite the embrace in states such as Argentina, Colombia, and Venezuela. Bolivia and Ecuador both take skeptical views of digital currencies. Yes, it's a currency that can take over the financial system. People might be scared, but it's also the opportunity. We've seen a ban in Russia. The miners has to stop again. They're talking about 10%. Now, if we look from the top to the drop, we're just over 10%. So, is it the miners selling their Bitcoin to get fiat currency to leave Russia as well? Where will the miners go? What is their next opportunity? Which direction? We found even more interesting news. 3 different possible reasons for Bitcoin's price crash to 38,000. Let's have a look and see what they say here. 3 possible reasons for Bitcoin's price crash to 38k. Here are the possible reasons for Bitcoin's recent downturn as it reached its 6-month low. Bitcoin's price took a beating in the past few hours. Everything was seemingly going well over the past few days. Bitcoin surged to a high above 43,000 yesterday, and it was testing the major resistance area around 44k. Unfortunately, it was then that the price got rejected and nuked all the way down to 38k on Binance. As Crypto Potato reported earlier today, this saw over 700 million worth of liquidations positions in less than 24 hours. Now let's have a look and 3 possible reasons Sorry about that. Just someone quickly interrupted. So 700 million in liquidation positions dropped. Now let's see. Now let's have a look at 3 possible reasons for which the market bloodbath might have happened. The first one is macro sell-off and high coloration. The SP 500 closed yesterday's trading session down 1.1%. The Nasdaq index down 1.3% on the same time frame. The Dow Jones down 0.89. If that's not enough, the derivatives market also took a hit. CNBC reported that the Nasdaq's 100 futures index tumbled following a disappointing earnings report from Netflix. The shares of the streaming giant dropped over 19% during the extended trading session on Thursday, once the document was out, showing a slowdown in the growth of its subscribers. But that should happen. Netflix had a massive gain during the pandemic. People were sitting at home, they didn't have anything to do, so what did? They watched Netflix. Slowly but surely, people starting to return back to work. Why? Netflix down? They don't have the time to keep on watching. The S&P 500 closed below 4,500 yesterday. Was the first one since October 18, 2021. Speaking on the matter was Scott Redler on T3 Live, who said, "The market has been flashing faulty signals for the past few weeks, and it seems as the broader indices are finally breaking down." As we can see, the market stumble. So BTC exchange inflows increased before the crash. Obviously, it will increase because they need to get the crypto out of storage to be able to sell them. One indicator of potential selling pressure is the total inflows of Bitcoin in exchanges. The more Bitcoin sits on exchanges, the higher the potential selling pressure typically is. Data from CryptoQuant reveals that the total exchange inflows were on the rise in the days leading to the crash. The number has been going up since January 16th and increased with the price indicating that Bitcoin was moved to exchange wallets with the intention of selling. 39K put options on derivative with highest open interest. As reported in yesterday's Bitcoin's price analyst, the puts for the 30K strike price on derivative had the highest open interest among put options. For those unaware, put options profit when the price goes down. The calls for the 44K strike price had the highest open interest among call options. On the other hand, it's worth nothing that there's approximately 538 million worth of Bitcoin options contracts that will expire on the derivative day, and the max pain scenario is for the price to be at 43K when this happens. So this is 3 reasons, but in my opinion, this feels like 3 small reasons, not main reasons for the crash. In my opinion, the main reason for the crash we just saw is the fact that Russia has banned crypto. The miners needs to find a solution. Which country will open their doors for Bitcoin mining? Is there a possibility of something coming and helping them to moved their warehouses, their miners, and everything over to give them the opportunity to keep on mining. I see we just got more news. This article just came through. Bitcoin risk crashing below 35K as Russia threatens to completely ban Bitcoin. Now let's read it and see what they're saying. On Friday, Bitcoin and Ethereum led other cryptocurrencies yet in another dumping frenzy that saw over 700 million in liquidations after Russia's central bank proposed a blanket ban on the use of mining cryptocurrencies within the country. According to a 5-page report seen by 𝙒𝙬𝙧, the bank cited various issues warranting the ban, including environmental concerns, well-being of residents, and the threat of financial instability. Potential financial stability risks associated with cryptocurrencies are much higher for emerging markets, including in Russia, reads the report. Nothing that most cryptocurrencies are unbacked and hence dangerous to the financial well-being of Russia. The ban goes on to propose various amendments to legislation. These include the total ban of any form of payments using cryptocurrencies, the prohibition of the issuance and circulation of cryptocurrencies within the Russian territory for any purpose, and the prohibition of financial institutions from investing in cryptocurrencies and related financial instruments. It further proposed a total ban on Bitcoin mining, citing that the current scale and further spread of cryptocurrency mining in the Russian Federation entail significant risk for the economy and financial stability. According to the bank, apart from cryptocurrency mining creating unproductive consumption of power, which is contrary to the nation's environmental agenda. It also creates the demand of mining-related infrastructure, which accelerates the spread of cryptocurrencies, creating incentives to environmental regulation. In the regard, the Bank of Russia believes the prohibition of cryptocurrency mining in Russia could be the best solution, the bank added. The mining ban proposal comes days after the European Union top regulator recommended a ban on Bitcoin mining, stating that it posed a threat to the world's climate change goals given its heavily reliance on renewable energy. In his recent interview with the Financial Times, Eric, vice chair of the European Securities and Markets, said the solution is to ban proof of work. Russia became the third largest Bitcoining mining hub last year after Kazakhstan and the US, with China banning crypto miners. However, with the high computing power needed to mine cryptocurrencies, countries such as Kazakhstan are fighting back, blaming regular power outages on cryptocurrency miners, which is why countries like Russia are seeking to shut down the industry. In the meantime, cryptocurrencies continue to absorb the Russian shock, with Bitcoin shedding more than 7% in the last 24 hours and 42% since the tapping an all-time high, with the coin currently trading at $39,108 after breaking the 40,000 support. Experts are now predicting a deeper plunge, which could see the cryptocurrency fall below 35K, finding support at 50K. So it's more and more banks and more things that's preventing cryptocurrency from moving forward. With over 18 million Bitcoin already mined, of a max of 21 million, ain't the dump we're seeing miners selling, which is holding the majority of crypto or Bitcoin. The options is endless, but let's see it seems like I have one trade I want to open on CopyPro Traders, as I got a signal that my Cardano has hit my next limit order. As we can see, Cardano has hit its next limit order. Just open my charts, go to Cardano and see if it triggered. Did it just missed my entry point? Give it a second screen to refresh this side. So just missed my entry point. So I'll just reset my alert. Have a look at CopyPro Traders and a new option that's coming, Liberium. Let me find Liberium to give you guys more information why Liberium is a great option, especially in the market we've just seen. So Liberium Crypto is a crypto trading execution site where users get the benefit and freedom of social trading. We are building the initial group of affiliates to help us grow a massive user base. All you need is a referral code and then you can build your group of affiliates. The target is to have 2 million users by the end of 2022. Now what Liberium is trying to do, or not trying to do, is doing, it gives you the opportunity to follow professional traders doing spot trading. When they open a trade, it mirrors the trade on your side. When they close the trade, it closes the trade on your side. If you don't like the trade, you can just go and close it. If you think there's enough profit and want to take profit, you can go and take profit. If you want to stop the trade because it's falling too much, you can go and stop it. You're in full control, even though the pro trader is taking the trade on your behalf. Secondly, your funds is safe because the system works through API keys, meaning Liberium connects their platform with your exchange. Your funds is safe, everything happens on your exchange, and no one can run away or take your funds. Have a look at the Liberium. It's a great opportunity, and it's still in pre-launch. Everyone is currently getting in. There will be a testing phase before you need to pay any subscriptions. Liberium is the next big thing, in my opinion. So just another article released now, or just came through. Let's see what they're saying. 200 billion gone from crypto markets as Bitcoin dumped to a 6-month low. The bears have complete control over the cryptocurrency market, with 200 billion gone in a day as BTC dumped below 40k. Bitcoin dropped by more than $5,000 in hours and dumped to its lowest price point in roughly 6 months. The altcoins are also deep in the red, with Ethereum sliding below 4,000. That's probably a mistake. It's sliding below 3,000. And the entire market cap losing about 200 billion in a day. Bitcoin dumps to a 6-month low after the past several days of gradually decreasing in value and claiming around 42,000. The primary cryptocurrency finally initiated an impressive leg up. It shot up by 1,500 in hours and touched a multi-day high of 43,500. As the bulls were preparing for another increase, the bears came to play and changed the landscape vigorously. Bitcoin started to lose value massively and dumped to 40,000. However, the worst was yet to come. In the following hours, Bitcoin lost that coveted resistance line and kept plunging. The time it plummeted to 38,250, which became the lowest price level since August 5th, 2021. Somewhat unexpectedly, this enhanced volatility caused pain for over-leveraged traders, with the liquidations rising above 700 million in a day. As of now, the asset has recovered some ground and stands around $39,000. However, the market capitalization has suffered quite a bit and is now beneath 750 billion. Altcoins, a sea of red. Well, obviously. The altcoins also jumped in value yesterday, but as with Bitcoin, it turned out to be a false breakout. As of now, the entire alt landscape is in the red. Ethereum touched 3,200 yesterday, but an 8% slump has driven the second largest cryptocurrency to under 2,900. Binance Coin down 8%, Cardano down 8%, Solana down 9%, Dogecoin 7%, Avalanche 9%, Shiba Inu 7%, Matic 7%, and Ripple 7% are all well in the red on a daily scale. But yes, there's a market correction, but we've seen the main reason is the ban in Russia. If it wasn't for the ban, will people be liquidated? Will the market have fallen this much? Near Protocol and Algorand have lost even more value on a daily scale, dropping by 13%. Even more price losses are evident from a different of alts. Untimely, the cryptocurrency market capitalization went down by 200 billion from yesterday's peak at 2.05 trillion to below 1.85 trillion. Yes, the market is down and it's dumping. But my question is, where would we be in the current market if Russia didn't ban? What if Russia came out and said, we fully accept Bitcoin? Where would the price then be? Leave me your comments down below. What's your thoughts on it? So we're back to the music and waiting for more breaking news. Alright, breaking news. Bitcoin fundamentals diverge from Bitcoin price. Dip as difficulty hits new all-time high. So Russia bans miners and the difficulty still hits all-time high. Difficulty follows hash rate to hit levels never seen before, underscoring miners' faith in long-term profitability. Bitcoin may have tanked to a 6-month low this week, but under the hood, the network is now variably stronger than ever. Data from on-chain monitoring resources, including Glassnode and Bitcoin.com, confirms that as of Friday, the Bitcoin network difficulty is at a new all-time high. The difficulty passes 26 trillion for the first time. The difficulty, which expresses how much miners need to work to solve the equation to process transactions on the blockchain, is arguably the most important of fundamental Bitcoin network components. The metric automatically adjusts to increase or decrease mining effort according to miner participation. The more competition among miners, the higher the difficulty. This has the effect of keeping mining stable regardless of factors such as sentiment, price, or unintended incidents. After dipping in mid-2021, difficulty took the rest of the year to bounce back, with the latest automated readjustments adding 9.32% to the previous levels. With that, it entered unexplored territory above the 26 trillion mark. So even with the ban happening, miners is all-time high. The miners probably hasn't been shut down yet in Russia, and they're maximizing the potential to get out as much profit as they can, as fast as they can, until the ban takes effect. So Bloomberg reckons Bitcoin's bottom might be near. Let's see what they're saying, or what's their thoughts and why they're saying it. Bitcoin, the flagship of cryptocurrency, tumbled almost $38,000 on the Fed's announcements and Russia's central bank's warning. However, seller dominance might be on borrowed time. RSI says Bitcoin price bottom is near. According to the analysis shared by the experts of Bloomberg Business, Bitcoin's relative strength indicator RSI entered the magical 30 to 40 zone. Looking at Bloomberg's tweet, the price chart suggests Bitcoin might be near a bottom. Historically, when RSI is below 40, Bitcoin becomes heavily oversold. Bears have now more energy to suppress the price. RSI was invented by stock and commodities analyst J. Wallace Wilder in 1978. As covered by You Today previously, RSI for major cryptos sits in oversold waters since early January. On January 7, 2022, it reached a 2-year low for Ethereum, a second cryptocurrency. That is why some analysts are certain that Bitcoin and major altcoins are nearing the bottom of the ongoing mini bear market. The third most painful day for crypto bulls in 2022. Bitcoin is down more than 10% in the last 24 hours. Its price briefly touched 38,100 on major spot exchanges amid massive sell-offs. As You Today reported earlier today, market panic should be attributed to the US Federal Reserve shift toward monetary tightening. According to CoinGlass, formerly by more than 726 million in crypto positions have been liquidated in the past 24 hours. Bulls are responsible for more than 81% of this huge volume. So Bloomberg sees a bottom coming close, or a lot of indicators is indicating that as well. If we look at that and this, and we put the RSI up, it will give us a good indication of what's happening. Let's put the RSI in the relative strength index. Putting it in, as we can see, it's currently on 31.57. That's below the 40 mark they're talking about, but still in between the 30 to 40 range. And this is just on a 1-hour chart. We look at the daily chart, it's way below. It's currently on 27.53. We take it to the weekly. There's still room to move, as it also below 40 on 39.77. So looking at this one indicator, it's showing a massive oversold region. But look at this. We went massively overbought as well, all the way up to 94.94. Will we see a drop further below 30? If we take it from 100 minus 94.6, could we see a drop to 6? I doubt it. Because I'm still a believer that institutions will keep on buying in. As the news comes out, we'll keep updating as we find more and more articles giving us information on what's happening and when it's happening. So, with the banning of mining in Russia, finally some good news. Lendvest chair phase to set up crypto mining operations in Texas. Does this give the opportunity for miners to move to Texas, or is they setting up their own operation? Quick take. Christian Faes, who ran London-based fintech firm Lendvest for over a decade, has corralled tens of millions of dollars for a new crypto mining venture. He already has a pilot up and running with machines and colocation sites and hopes to construct a dedicated mining facility in Texas. Christian, co-founder and executive chair of London-listed fintech firm LendInvest, has quietly set up a crypto mining operation into which he and a small group of investors have poured tens of millions of dollars. Face told the blog that the business will be based in Texas, where the Australian-born entrepreneur hopes to build a mining facility powered by renewable energy sources. He already has machines up and running at co-locations data centers in Pennsylvania and Tennessee, but declined to disclose the size of the operation in terms of energy output or crypto mined. The venture is being run out of Face and Co, an investment firm through which he also manages angel investing activities. Face says he has partnered running operations in the United States and is looking to hire people to grow the business. He and a group of half a dozen investors have poured tens of millions of dollars into the venture, he says. Without giving a exact figure, the money has been spent on purchasing equipment and for co-location space. There's a lot of investor interest in this. I'm definitely holding back capital at this stage, he says. Supporting institutions. Face set up property lending platform LendInvest in 2008 and ran it as a CEO until January 2020, when he took the role of executive chair in July of last year. The company went public on AIM, a sub-market of the London Stock Exchange, at a valuation of $255.6 million. It has lent more than $4 billion to property developers and landlords in the United Kingdom, according to the website. Face began exploring setting up a crypto mining company early 2021 after London-listed Argo blockchain caught his eye. I saw some similarities to LendInvest back in 2008, where there was a pretty good opportunity to get returns but few institutions in the space, he said. Building out what he calls a pilot version of the business had not been straightforward, however. Competition for the latest mining machines, ASIC, and for rack space within co-location sites is high. There's a lot of shaders in the sector, says. The environment concerns that have dodged crypto mining are another challenge. Earlier this week, a top regulator at the European Securities and Markets Authority called for a ban of proof-of-work mining within the block because of how energy intensive it is. Outright mining bans have already been instigated in China and Kosovo. Taxes bound. Given the political headwinds in Europe, Face has chosen to base his operation in Texas. He plans to draw entirely on renewable energy sources, a mix of solar, wind, and hydroelectricity. The machine Face already has up and running elsewhere in the US are roughly 75% powered by renewable energy, he says. Texas has proven a popular choice for crypto miners. Argo blockchain is currently in the process of building out a site in Dickens County that cost as much as $2 billion. In Texas, I think the political environment is quite pro-mining, says Face. It's kind of the center of the universe in the space, which is double-edged sword because it's quite competitive. He is hoping the mining business is fully operational by the end of the year. Russia banning mining, new mining companies setting up and going forward. Where is the scale? Where is the balance? Or is banning crypto and mining creating opportunities? Leave me your thoughts and concerns down below. What do you think? Hey everyone, so two videos coming out later today. We just found a massive move of one of the coins in the last 24 hours. While the rest of the market was plummeting, this coin is actually up. So stay tuned for crypto bullish. And who knows, there might be a second surprise coming. Have a good one. We'll be back with more news